Good morning. Thank you for joining us for Revista's review of the Southeast. My name is Hilda Martin, and I'm one of the principals here at Revista. Today we'll start off with a brief overview of Revista, followed by some insight from Robert Milligan from Healthcare Trust of America, our Diamond sponsor. Mike Hargrave will then go into detail on the Southeast findings on inventory, construction, and transactions. We encourage participation in this discussion, so if you have a question or comment, up at the top left-hand side of your screen you'll see a Q&A. Just click on that and type your question or comment. So Revista was launched by Elisa Freeman, Mike Hargrave, and me, and it was founded on the premise that there are too many barriers to getting detailed information on medical real estate, and that the information currently available is not targeted towards this sector. We set out to change that by creating an easily accessible database of hospitals, medical office buildings, medical condos, medical retail buildings, even office buildings with medical tenants, as well as freestanding emergency rooms. This information is free on revistamed.com to all registered users. Additional data is provided on construction, transactions, affiliations, and demographics. You can also see if there's a surgery center or urgent care, among a lot of other things. We're still in the process of finishing the RevistaMed database, which will be available nationally in October. Today, we're reviewing what we have uncovered in our research of the Southeast. So the Southeast region comprises of Alabama, Florida, Georgia, Mississippi, and Tennessee. And then we'll further drill down on the Miami and Atlanta metros. On that note, I would like to introduce you to Robert Milligan, the CFO of Healthcare Trust of America. We would like to thank HTA for being our founding Diamond partner. And we'd also like to thank Robert for joining us today to share his insight. Robert?
Yeah, thanks Hilda. And at HTA we certainly are excited to be one of the founding partners of Revista. At HTA we are one of the largest dedicated owners of medical office buildings in the U.S. with almost 15 million square feet in 27 states. We also have a national property management and leasing platform. So we're interacting with health systems and other healthcare providers on a daily basis. So we certainly think this is one of the most dynamic and compelling areas of real estate that's out there today, given the macroeconomic tailwinds that this sector has behind it, from the aging population to the rollout of the Affordable Care Act to really the employment growth that the sector is expected to experience over the next over the next decade. So we do think it's a really compelling sector to be invested in today. However, it's also been one that's been historically underinvested in from an institutional perspective, with really less than 10% of most of the real estate invested in by some sort of an institutional ownership. So along with that has come really a lack of the data that investors and providers can find really in most other real estate sectors today, which leads to certain inefficiencies and views on the sector that we're excited that we think Revista is really going to be able to step into that gap and help bring the sector forward. Obviously the team from Revista has a lot of experience doing this in some of the other sectors within healthcare on the senior housing side, and we're excited to see them bring together this data that's really going to be able to be both timely, accurate, and really insightful and targeted to the sector that we think is going to help provide the quantitative tools that today's investors and healthcare providers really need to move going forward and make the best decisions around all sorts of capital allocations. So at HTA we are really excited to be the founding partner, one of the founding partners of Revista, and are excited for this rollout both in the Southeast as well as the national that's to come. So back to you, Hilda.
Real estate market in the Southeast. We also want to provide you with the opportunity to comment or ask questions. At any time, you can ask a question by using the Q&A link in the upper left-hand portion of your screen. Rest assured, we'll make every attempt to answer your questions as they come in. So we'll go ahead and start off here with the first slide we'll show. This is sort of an overview of our database so far. Basically, we're building a nationwide database of all medical properties During the first phase of this database, we're focusing on inventory, construction, and transactions. The property types that we are tracking in this first phase are hospitals, medical office buildings, office with medical tenants, office buildings with medical tenants, retail settings with medical tenants, and medical condo buildings, and freestanding emergency departments. These properties are all free to search and research on revistamed.com. So far we have completed 23 states, basically all the states east of the Mississippi River. In these states we've cataloged and qualified over 34,000 medical properties. Of these, we have about 22,000 purpose-built medical office buildings. Now, the way that we kind of define a medical office building is it's generally designed and purposely built for medical purposes, and the properties that we target or shoot for have at least usually about 10,000 square feet in the building. So these 22,000 medical office buildings account for just about a little bit under 900 million square feet. So that gives you a sense of how large our database is so far. And as Hilda mentioned earlier, we are aiming for a fall finish of this database across the country. If you go to revistamed.com, there's also many other resources we have there. We're really aiming at trying to make these resources easy to access and usable. So we have what we call an MOB scene. That's sort of a blog where we detail happenings in this sector. We have various reports in our Market View Reports section on some of the metros that we track, as well as transactions report and various construction reports. So when you get a moment, please check that out. We'd love to get your feedback on those reports as well. So we'll go on to the next slide. This is a slide that rolls up the Revista regions and counts up the various properties in each of the regions. So the Northeast region was the first region we completed. That spans from Delaware up through Maine. And you can see the property counts there. That's our largest region so far. We count roughly 12,000 medical properties in the Northeast region. We actually profiled the Northeast region at our May launch event up in the Boston metro, which was very lively. And so that's our Northeast region. Our Mid-Atlantic region, which covers from Maryland down through South Carolina, we have about 3,450 medical office buildings. We have a little over 5,400 total medical properties in the Mid-Atlantic. The East-North Central region basically spans from Ohio and Kentucky up through Indiana, Illinois, Michigan, and then ending at Wisconsin. This region has just about 9,000 medical properties in that region. And then today's focus, we're going to focus on the Southeast. As Hilda mentioned, this covers the states of Georgia, Florida, Alabama, Mississippi, and Tennessee. And here we have 7,858 medical properties and a little over 5,100 medical office buildings. And so we have a question here about where we're getting the data that we put into our database. We have spent the better part of the last year building this database, and we're obtaining data on properties from various sources. But rest assured that all of these 34,000 properties that we've qualified, we're actually hand researching every single one of those properties to physically qualify those as a certain type of medical property. And so if you want to hear more about our methodology, feel free to give us a call. We're happy to discuss how we go about obtaining properties to research. Okay, so we'll continue on with a slide that shows some of the data that we've started to crunch in terms of looking at penetration rates by the various regions that we're tracking. And so we have two measures here of medical office building penetration by region. One is the square feet of medical office buildings per population. So we just take the sheer population of that particular region and compare it to the amount of medical office square feet we've calculated in that region. And then the other is medical office square feet per physician. And so this data on physicians we obtain through the American Association of Medical Colleges. They publish a publication called the State Physician Workbook on an annual basis. And so that data comes from there, where they show the count of physicians by state and compare that to the population. So we're using their data for physician data there. So when we look at penetration rates by region, we have about, looking at the left graph, we have about 4.9 square feet, MOB square feet per population. That's the way that calculates out. The Northeast is our highest region at 5.8 square feet per population. But you can see there's a pretty wide variation in terms of the penetration compared to the population. The Mid-Atlantic is at 3.8, and what that implies is that it has roughly 35% less medical office space per population than compared to the overall Northeast region. So that's an interesting metric there. When we look at the square feet per physician, again, so far across the 23 states that we're tracking, it comes out at roughly 1,759 square feet per physician. Again, this is good to compare market by market. I'm not sure that this would be a useful metric in actually, planning out a specific building space planning. But by this measure, the East-Northeast has the highest amount of medical office space per physician. So this metric will be interesting to look at on a market-by-market basis as we roll out our data nationwide. Okay, the next slide shows a roll-up of our Southeast region. Here you see the total inventory of medical office buildings. We're going to focus primarily on medical office buildings from here on out. Here in the Southeast region, we see a total count of all the medical office buildings that we've finished. So we have roughly a little over 5,100 MOBs in the Southeast region. It totals about 175 million square feet or so. And we calculate the approximate value to be about $35 billion worth of medical office space in the Southeast. And the graph on the right shows the percent of the market by square feet that is either Class A, considered affiliated, or considered on campus. And so let me go ahead and define a couple of metrics here, as this is probably the first time you're seeing them from us. Basically, we categorize buildings as either Class A or Class B. And we generally try to conform to the definitions put out by BOMA, but we're out there counting up certain conditions for each building, and so we have subjectively gone in and classified each building as either Class A or Class B. With regard to affiliated, we're looking at whether the hospital or whether the system sponsors or has a practice that they rent space from, or they actually own a building in the market. And so you can see the Southeast, we count up roughly 74% of the buildings in the Southeast we're considering affiliated. And so that says that either the hospital or the health system has a presence in 74% of the buildings in the Southeast, and that's much higher than what we were seeing in the Northeast when we rolled out our data in May for the Northeast region. So it suggests that the hospitals and the health systems have done more of a job of getting out in the marketplace and being involved in some of the outpatient and medical office buildings in the Southeast region. And then 35% of the square feet, the space in the southeast region is considered to be on the campus of a hospital. By on campus, I know this is a hotly contested metric in the sector. By on campus, the building must be located either within the footprint of the hospital or really within eyeshot of the actual hospital. We're not counting like less, a half mile away or a mile away or clearly across the street and as technically on campus. Okay, the next slide we're showing some of the southeast region medical office buildings. Some of the average square feet for the medical office buildings. And here, so you see Class A buildings, roughly 42,000 square feet per Class A building on average. Class B, 25,000. On campus, obviously, the larger projects. Overall, the average works out to 34,000 square feet per building. That's a little bit smaller than the average in our database. Our database average so far is about 41,000 square feet. That's across all the 23 states that we've finished so far. And so we have this graph for every one of the metros that we complete. We can do this graph by state as well, so we look forward to seeing what the inventory looks like state by state, metro by metro, area by area. Okay, here we have a roll-up of the southeast region medical office buildings by state. And so here you see, for each state, you see the number of medical office buildings that we've counted up, total square feet, and then our penetration metric, which is the MOB's square feet per physician or per doctor. And you can see that Florida, which has about 77.7 million square feet, it's about 45% of the southeast square feet, total space. But Florida, Tennessee, and Georgia all have relatively low comparative penetration rates compared to, say, Georgia and Mississippi. And so this is interesting data to us, and it kind of brings up a question that I might ask Robert. Robert, do you see this as a sign of sort of attractive supply-side fundamentals within the Southeast, and maybe in particular a market like Florida?
Yeah, I think it's certainly a good question, and now that we're able to see some of this data, it does create some questions that we have around it. One of the things we actually think is interesting about the penetration rate of MOB square feet per doctor that we've started noticing within our own portfolio, and we've only been able to talk about it qualitatively so far, is really this fact that as tenants and physicians are moving forward under the Affordable Care Act, you're seeing a lot larger groups. And along with these larger groups tends to be this the fact that they're going to also employ physician extenders, whether it's physician assistants or nurse practitioners or whatnot. So we actually expect nationwide this MOB square feet per doctor to actually increase, just given kind of the care patterns that we're seeing in some of the new trends that have been ongoing for a little bit of time, but we're certainly seeing it expand. So from just a data perspective, we expect to see this MOB square feet per doctor is an interesting one that hasn't been readily out there so far, but we do expect it to change over time and to increase, and so that's one of the reasons why we're excited to see this data out here. But to your other question on Florida, we certainly, that's one of the things we've identified as we've looked into Florida and said, from a supply perspective, given the level of care and the demand for care that is down there in the state and is expected to continue to grow, we did look at it and think it was a relatively attractive market for us to target. And so, but now that we can see the kind of the quantitative data, it's no surprise that it's coming out where it is.
Yeah, well, that's good. And just to remind everybody, you can ask a question at any time by using the Q&A link in the upper left-hand portion of your screen. We'll try to get to all appropriate questions that we can answer, even as they come in. Okay, so we'll go to the next slide here. We do track transactions within our database. We have, what I would call or say to be pretty good information on who owns the properties and who's doing the buying and who's doing the selling. And so this slide shows what we calculate to be the most active buyers in the Southeast over the past year. And so of the buyers, obviously Healthcare Trust of America, HTA REIT, Robert just mentioned they like Florida, and they obviously like it quite a bit. They have the lead in terms of volume in the last year. A little over $200 million was acquired by HTA. Physicians Realty Trust, or DOC REIT, has also been active in Florida, particularly in Georgia and Mississippi. They've been active and acquired a number of properties even this year. Baptist Health South Florida has been another buyer. That's the top what we see as health system buyer. They bought a number of buildings, medical office buildings in the Miami market. And then ARC Healthcare Trust 2 has closed on, or is in the process of, or has closed on a number of properties, including the LaSalle MOB portfolio too. We actually detailed some of the properties in that LaSalle portfolio at our on our MOB scene at www.revistamed.com. So check that out. It lists all the properties and the prices per properties and so on and so forth. And then Healthcare REIT, which is one of our other partners, has also been very active in the Southeast. And you can see the companies that are listed down there. If for some reason you feel like you were left off or we're miscounting something there, please get in touch with us. We're happy to update our data and list list this as it goes on. So we'll go to just briefly. I want to announce, if I can take a minute, announce our national launch event, which is to be held November 19 and 20 in Chicago, Illinois. This is going to be a different healthcare real estate event. We're going to focus pretty heavily on high-level networking, as well as there's going to be a real data focus around the conference. Our general session speakers are going to include National Chief Economist Sam Chandon, who will headline the opening session. And then our closing session will feature an interview with leading experts from Starwood Hotels and Resorts worldwide, a national retail consulting firm called Buxton, as well as the National Investment Center for the seniors housing industry, seniors housing and care industry. And these experts will show how other industries use data for their analysis of real estate decisions. To attend the conference, register before October 10th. You'll save $200 on your registration, and then just for listening to this webcast, you can save an additional $50 by using the code that you see on the screen, which is SEWC50. That's SEWC50. But hurry, this code expires 1 week from today. And so also, while you're registering for the conference, be sure to book your hotel by October 10th as well. Okay, so let's go on and talk about one of the markets that we're going to discuss here, and that's the Atlanta medical office building market. So we showed Georgia as having a higher amount of medical office building square feet per doc compared to both the Northeast and, comparatively speaking, to even the Southeast region. And Atlanta seems to be following that pattern, or maybe even responsible for a fair share of that pattern. It's a fairly large medical office building market. It has 604 buildings, roughly 22.8 million square feet, and we calculated about $4.8 billion of real estate value there. Interestingly, in Atlanta, 81% of the MOBs that we're tracking are considered affiliated. Again, that suggests that there's a hospital or system sponsored practice in the building. So we don't calculate it in terms of they have to lease a certain percentage of the building. It's just that they have a large like a presence in that building. But the important thing here is the 81%. That's an even higher measure than the Southeast region, and this really suggests, and I think we're going to play this out in the next few slides, it suggests that we can see the systems in Atlanta are like on a relative basis, they're much more aggressive in getting out in the marketplace compared to other areas that we've been tracking. And you can see that 28% of the MOB stock is considered on campus in Atlanta. So let's go ahead and drill down a little bit in Atlanta. So one of the interesting things that's going on in Atlanta is construction. And so this is a graph that shows both hospital construction and medical office building construction. It includes any of the qualified property types that are considered under construction or in late enough planning that we can get really good measures on them, like when it's going to open and it's definitely going forward and so on and so forth. So when we add all that up, we get about $1 billion of construction value between hospitals and medical office buildings. The graph you see is the vertical axis is square feet. So you can see what's expected to deliver in what quarter and whether it's hospital or medical office building construction. And so Atlanta has quite a bit of MOB product under construction. In fact, there's a little bit under 200,000 square feet that's scheduled to open in the third quarter. We'll discuss some of that in the next few slides. But most of the construction in the Atlanta market would be considered outpatient or medical office building. Okay, so here's a screenshot. This slide shows a screenshot of our Revista property search database. Again, this is, anyone can go in and search here, and this shows an interesting story. This is a screenshot of that will detail some of the aggressiveness that I spoke of with regard to the health systems in Atlanta. This shows the Midtown area of Atlanta. You can see the area to the north part where there's a bunch of medical office buildings, which are the dark blue pins, and then the light blue pins, which are office with medical. There's a hospital underneath those, which is the orange pin. That's the Piedmont Hospital area to the north, and then to the south, you see the Emory University Midtown Hospital area with the respective medical office buildings there, and the office with medical buildings there. And then smack dab in the middle of those, Northside Hospital, Northside Health System has purchased some land that they intend to build a 17-story tower that's going to be mainly outpatient. Northside really does not otherwise have a presence that we've been able to detect, within this graph or in that specific area. So this is an example of a health system going into an area that was traditionally dominated by these two health systems in their respective areas there. This is another area of Atlanta. This is Cobb County, and here you see a couple of properties that are under construction, or one is in planning, the other is under construction. The one on the left is the Wellstar East Cobb Health Park. This is a system, Wellstar, that's been very active up there in Cobb County. Among other things, they're building these outpatient, quote, kind of health parks, which are akin to some of the medical malls that we've been seeing in other areas of the country. The prototype one was built in Ackworth, which was roughly about 75,000 square feet, and they're about to open the second one any day now, which is the one that you see on the left, the Wellstar East Cobb Health Park. This property is going to be considerably larger and is scheduled to open within the next few weeks. I'm actually going to show a slide of some of these buildings on the next slide. And then to the right, you see about 2 miles to the southeast, Northside Hospital has recently won approval to build an 80,000 square foot MOB at the intersections of Johnson Ferry Road and Old Town Parkway. And so this is an example of some of the systems really getting out into the marketplace in this Cobb County. So the next slide will show these properties and some of the construction details that we have on there. And so Wellstar actually has its near-term sites on a total of 4 health parks. 3 of them are to be built in Cobb County, and then 1 up in Cherokee County. These are generally large and pretty expensive projects. The one in 2 in Cobb County, East Cobb, is roughly about 160,000 square feet. It's a little over $70 million building, which is not only the real estate but includes some of the equipment as well. These buildings generally include outpatient services such as primary care, urgent care. The buildings will often have surgery centers and obviously many physician offices. So when we look at this is just Cobb County. When we look at the amount of inventory that will be coming to market, by, say, the end of 2016, it's about 400,000 square feet of new space. Currently, from what we've counted up, we have about 2.6 million square feet of existing MOB stock in Cobb County. So this graph portends a roughly 15% increase in the MOB inventory in Cobb County. And so that's an interesting stat. Robert, how do you view kind of the activity in Atlanta, especially with some of with regard to some of the systems in getting out in the marketplace?
Yeah, it's certainly, Mike. It's a good question. I think what you're seeing play out here is something we've looked at in the Atlanta market, is that you certainly are seeing a number of health systems in Atlanta becoming very competitive with one another. Health systems today are definitely focused on achieving market share, and one of the ways they're doing it is looking to get out in the community and put a flag in each of the local neighborhoods that are out there. So I think it's certainly a part of the health system competition and how they're looking to get market share playing out on the real estate front. So I think that's one of the things that's unique. That's certainly playing out in Atlanta, and has happened in a few other markets, but obviously each of the markets are a little bit different in that respect. So it's always interesting to see the data play out. Now they're able to see everything. So.
Okay, great. Okay, so now that we've kind of given a profile of Atlanta, we'll head over to Miami. And so, again, we're focusing primarily on the medical office market. When we switch to construction, we'll also fold in the hospital market as well. The Miami market, interestingly, is from a medical office perspective. Miami spans Miami-Dade County, Broward County, and then up through Palm Beach County as well. This market is actually smaller from an MOB perspective than the Atlanta market, which is pretty interesting. We count 438 medical office buildings in that market, roughly about 18.6 million square feet, and the approximate value being at about $3.7 billion worth of real estate. Interestingly, you saw Atlanta had 81% of the buildings were affiliated. In the Miami market, we're counting roughly a little over half of the buildings are would be considered affiliated. That's more in line with the rest of our database. So Atlanta has a relatively high amount of affiliations comparative to other markets. Robert, you guys have established obviously a presence in South Florida. Can you kind of outline your portfolio here?
Yeah, I think certainly South Florida has been an area of focus for HTA over the last year. It was obviously a market that was very hard hit during the economic downturn, but you're really starting to see the whole entire Miami area turn around economically, as well as the real estate fundamentals really coming back into line as rents are now kind of at market, and it's gone through the sufficient adjustment. So from our perspective, we think it's a great place to be invested, just given kind of the aging demographic. It's a great area for seniors. It's a great area as you're going to see the Affordable Care roll out. It should be one of the main beneficiaries there. So we've taken the approach of when we go into a market, we like to go into a market with some scale, obviously given kind of the size of the company that we are. Will also give us the ability to go in and really establish our asset management platform. So over the last year, as you put in one of the previous slides, we have invested about a little over $200 million in the Southeast, most of that focused in the South Florida market, everywhere from the Miami end, where we've got some buildings around some Baptist hospitals, as well as with tenant hospitals, all the way up to West Palm Beach, where we've invested next to the Good Samaritan Hospital up there. So what we're seeing from our approach is the ability, a market that's certainly growing from a real healthcare perspective. It's going to continue to grow, one that's turning around economically. Now there's just the opportunities to get down there and invest in scale, and so we're really excited about the Miami market.
Okay, good. And what's interesting, Robert, is you look at some of the economics in Miami. We for each of the markets that we're tracking, we'll list some of the key metrics, some of the key sort of economic metrics important to medical real estate in the market. And Miami looks like a pretty strong market. I mean, it's got growth, on a year-over-year basis in terms of jobs, as well as some of the pricing power, that exceeds the averages of the U.S. And so it looks like, I know Miami was one of the markets that back during the downturn, from a housing perspective, got hit pretty hard, and that impacted a lot of the economy down there. But it looks like it's recovering, nicely from a pricing perspective and from a job growth perspective. And so those are some of the fundamentals that that Robert spoke of there. So let's go ahead and look at.
Mike, I'll just chime in that and say, I think if you go down to Miami, you really notice a noticeable difference in the activity. Just walking around the streets, walking around the health systems, you see a lot more activity going on. You feel it in the air, and the numbers certainly back it up. But it is one that was hit hard, but is certainly coming out of the downturn very strongly.
Okay. Robert, we have a few questions I'm going to try to clear out real quick. So there's a fair number of questions in terms of how we're classifying our properties, such as, freestanding urgent care properties, retail with medical, and so on. We have with regard to methodologies, we have, we track medical office buildings, we track office with medical buildings. Retail with medical buildings are retail settings that have more than 3 medical tenants in that building. With regard to urgent care buildings, that's a tag for us. So we understand there are freestanding urgent care buildings, but they will be tagged as either medical office or medical with retail, and you can search by by urgent care to pull those up in our database. We're happy to have discussions about our methodology. Give us a call at any time, and we'll go over that, and happy to have a discussion with you. We have another question, Robert. Are REITs interested in buying? We were talking about these health parks that are, in excess of $75 million per health park. With sizable retail space in that building. Are the REITs generally interested in those types of buildings?
I think REITs certainly, anywhere the health systems are going and investing their dollars, it's somewhere that the REITs and the real estate investors are certainly to take a hard look at. And so I think, from our perspective, you're always looking for kind of some long-term commitment to an area, and a lot of times these campuses are turning into the true destinations for healthcare. So I think it is absolutely something REITs are starting to take a look at. But they're obviously kind of unique circumstances for each one.
Mm-hmm. And then what about Robert? What about the consolidation of practices? Theoretically, they would yield smaller administration requirements. That's one of the reasons that this is happening. And therefore maybe fewer square foot requirements, and that might lead to that square feet per physician metric, going down over time, I guess. What are your thoughts on that?
What we've seen play out when we've seen these consolidations is one where you certainly go from, let's say, 1,000 square foot tenant to one that's 4,000 or 5,000 square feet, or potentially even larger than that in many cases. But on a per physician basis, you do certainly get some consolidation of overhead in administration. But what you tend to make up for that is you see a lot more exam rooms, and you see a lot more ability, like we talked about, to use more of the physician extenders, whether it's physician assistants, nurse practitioners. I mean, this could be a question for you, Mike. I don't know the last time you went to a doctor when you actually saw a doctor. For me, it's been a while. I usually go and see the physician assistant a few times first, and so that's really what we see on an employment perspective, really being the kind of the key driver of employment in this sector. Healthcare is the fastest growing sector from a job perspective in the U.S. economy. But most of that job growth really is coming from these technicians and physicians assistants and nurses, things like that. So from a statistical perspective, we actually see the square footage per physician going up with these ancillary healthcare providers taking up more space than the consolidated overhead is going away. And one of the other things is it's actually great for us as real estate owners when physician practice consolidate and lower their overhead. They're much more profitable. They're much more focused on how they grow their top line. So from a locational and real estate perspective, that's they certainly apply a lot more value to that. So.
Okay, thanks, Robert. And there's been a number of questions in terms of accessing this presentation. We will try to make this presentation available either through our website, or we might send out an email with a download link after the presentation to the people that were on the call today. So thanks for inquiring about that. Okay, so let's go ahead and talk about some of the construction in Miami. And so again, unlike Atlanta, Miami's got a fair amount of hospital construction in the market, not as much outpatient or MOB construction. But like Atlanta, there is about $1 billion that's considered under construction in the Miami market. However, again, most of it's hospital, a lot of it's hospital expansions in the Miami market. There's a number of smaller kind of MOB projects. But again, from a square foot and dollar perspective, most of it's hospital. So here you see a roll-up or a detail of the hospital projects, some of the hospital projects that we're counting in the Miami market. These are pretty spread out. They're not in any one concentrated area. But a couple systems of note. You see at the bottom we have the Boca Raton Regional Hospital has got 2 projects going. One is a neuroscience institute, and the other is a women's health building. Interestingly, this hospital is also building a smaller ambulatory MOB. But both those projects that are on this screen are scheduled to open later this year. Also, the Cleveland Clinic and Miami Children's are also building fairly high-profile projects. Cleveland Clinic, Florida, is building a 5-story, 143,000 square foot expansion. Again, that will house a neurological and cancer center. So interesting to see the spread of construction in the Miami market. Unlike Atlanta, it's not so much outpatient. It's really hospital expansions that we're tracking. There are a couple of outpatient projects, pretty high-profile ones that we caught in the Miami market. You have the UHealth ambulatory expanding into Coral Gables. This has been a long-time planned project. It's a large ambulatory building, medical office building, roughly 200,000 square feet. And again, the estimated value is roughly about $142 million. That includes the building and equipment. It's both these projects are by all accounts about to start construction. and that's expected to open in the summer of 2016. And then Baptist Health South Florida, which we detailed earlier as being one of the active buyers in the Miami market, they are planning a cancer center, the Miami Cancer Institute, a big property, 395,000 square feet, roughly $400 million in value. That's scheduled to open in 2016. Baptist Health claims that this building will house the first proton therapy center in South Florida. So it'll be interesting to see these two projects come on the line. So again, we want to remind everybody that you can take this opportunity to ask a question. Just use the question and answer link in the upper left-hand portion of your screen. That's the end of our data presentation. So I want to wait a minute or two to see if there's any questions. We do have a question about what is our definition of hospitals. Right now we're tracking just general acute care hospitals. We will be tracking other types of hospitals in the future, but right now when you go on our site you'll see just general acute care hospitals. We have on our sites, we've downloaded some of the cost report data for each of the hospitals, so you can access that as well on our revistamed.com site. We also have a question about the Atlanta medical office building market that we considered. We counted it up to be 81% affiliated. Do we see integrated health systems getting into the landlord business? And if so, what is the impact of Stark laws that are out there? I can take a stab at that, Robert, and if you have any thoughts on that, please chime in. From what I've seen, yes, the systems, like the Wellstar buildings, when they're going in and building these health parks, they appear to me to be owned by the health system. There's a number of plots of land and buildings that are owned by some of the health systems. I'm not a lawyer, so I can't speak to some of the Stark laws. But Robert, I don't know if you have any thoughts on that.
Yeah, I think healthcare, obviously health systems are significant owners of assets kind of in the sector. And I think it's been a topic of a conversation to see how that changes over the long term given different capital allocation decisions that need to be made. But I think it's going to be that's a great topic to bring up in the national rollout event. Coming up in November. It's obviously one that's very timely. And it's getting a lot of attention. I think it's one that both health systems and real estate providers are obviously focused on. And the Stark laws, just given kind of the complexity with them and the potential for health systems to run into trouble with them, it just adds another kind of wrinkle into that decision-making process that they go through there. So I'll use that as a plug for the next event.
That's right, yeah. Yeah, everybody remember to register for our national launch event, November 19th and 20th. And just a reminder that when you go on to revistamed.com, the property database is free to search and free to research. If you register with us, you'll get access to a bit more information than if you don't register with us. And we have lots of other resources available on the site. In time, we will be rolling out a nominal paid subscription to access kind of greater amounts of data. Look for that this fall. And then if you're interested in talking to us about sponsoring or being one of our partners or being one of our sponsors, please give us a call or email us. We'd be happy to talk to you about that. So again, remember to register for our event on November 19 and 20. We want to thank HTA and Robert Milligan for lending their time and lending their resources to Revista, and we want to thank all of you for attending this presentation, and we look forward to following up with you individually after the call. Thank you, and this concludes the call. Thanks.